Hey guys, in this video, I'm going to be breaking down what a hard money loan is in real estate and the top 3 differences between hard money and a traditional bank loan. You have probably heard about the term hard money from people in real estate who are investors or who fix and flip houses. Well, why are they using hard money? What's wrong with a bank? Number 1, credit score. Bank loans. So bank loans will always have a credit score or FICO score minimum. 680 FICO or higher, or 700 or higher. Their entire pricing and everything has a lot to do with the credit score. Hard money loan. Even though yes, we do look at the credit, we generally don't have a credit score minimum. We look more for due diligence purposes, just to understand the credibility of the borrower. Actually, the credit report will tell you a lot more about the person than just the credit score. For example, if they have any pending bankruptcies and so on, we can do a loan for 600 FICO where a bank won't most of the time. As long as we're comfortable with everything else we're underwriting about the loan. So, bank loan. High credit scores needed. Hard money loans, high credit score, not as important. Key difference number 2, finance records. So with bank loans, most of these have a full doc income verification or limited doc income, meaning they'll ask for all the financials from the client. 2 years of taxes, pay stubs, and if you ever bought a house, you probably know this. Hard money lenders, for the most part, do not ask for taxes and pay stubs because we're more focused on the property and the collateral. The collateral is the real estate. We're comfortable with the equity in our loan to value ratio, comfortable with how much we're leveraging against that property, that we're gonna make the loan all right. Well, Sam, how do you know if they have the income to pay or not? Well, we do ask for bank statements a lot of times to see how liquid or how much reserves they have. And if we're concerned about this, we can include what's called an interest reserve in the loan. This means taking out interest payments from the loan using the equity, meaning borrower doesn't have to pay out of pocket. So again, bank loans, 2 years of financials, hard money loans based on the asset and the equity. Can also give options to finance the payments into the loan, which we call an interest reserve. All right, third major difference, guys, big one here. The bank loans are based on borrower, the individual. 90% of the underwriting is based on the borrower personally. So their credit score, their income, employment history, reserves in the banks, etc. It's all focused around the person and very little having to do with the asset, the property. When it comes to property itself, banks really only want to see property appraises at the value they're looking. That's it. With hard money loans, it's the opposite. 90% of the underwriting has to do with the property. It is property driven, very little has to do with the borrower. We want to know everything about the property, the investment, how it pencils out as a real estate investment property, how much equity there is, the location, after repair value, rehab budget. It's fair to say 90% of the underwriting is focused on the property and the investment, and only 10% is on the borrower. We obviously look at credit to understand credibility, but low credit is not a deal breaker. Also, we look at experience for the borrower as an investor. Again, as long as the property pencils out, the project pencils out, it's a good investment, we like the asset, even if their experience is low, with hard money loans, we're still gonna make the loan. So again, banks, all about the individual. Hard money, all about the asset. Will this pencil out? So that's it. There are a lot more differences between them, but these are the 3 differences that I think are most significant to point out. I hope this was helpful for you to get started understanding the basics. If you do want more information and more videos on hard money loans and real estate investing, be sure to subscribe to the channel and hit the notification bell for more.